Okay, ladies and gentlemen, we're back with our end of day report for Tuesday, May the 2nd, 2023. As you know, tomorrow is FOMC day, and there's a lot going on in the global economy, more specifically the U.S. economy. We got the dollar, or should I say the de-dollarization process going on, and we got the debt ceiling going on, and we got a banking crisis going on. There's just a lot going on right now. So let's take a look at these charts and we'll see what we got cooking as we're awaiting the big day tomorrow. All right, so here in the Bitcoin futures, we're still in neutralization. Just FYI, you can trade neutralized markets, okay? You just have, it's more of a day trade. You're being quick. You're going in and out. Okay. So just FYI, for those of you that want to trade the neutralized markets, you don't have to be afraid if you want to trade it. You can trade it. It's just that the conservative approach is to wait until the market comes off neutralization, but you can still do something with them if you so choose to. Like you can see here, you had the back-to-back rally alerts and the markets did rally. Then you had the crash alert, the market did fall. Now we have a rally alert for tonight into tomorrow's trading for the Bitcoin futures, as it looks like the market wants to try to test 30,000 one more time. So again, this is possible to do if you so choose to desire to do it. Just understand what's going on when you're dealing with it. All right, so just FYI there. Okay, so the next one we're looking at here is silver. Silver's in a bull market, but we still got that bearish trend momentum reading. So you know that the market is in the sell the rally mode even still. All right, so until this market decides it wants to, relock in, until the bull market reclaims silver, it hasn't done it yet. All right, it has not reclaimed itself yet. So that's what we're waiting to see, if it's going to do that or is it going to falter. The $22 trend line, or I say not trend line, but Kumo Cloud support is a pretty strong support. But the market's going to need to test that if it's going to move on, because it hasn't really tested. We've been moving sideways, as you see. So either the market's going to break out to new highs and the bull market will reclaim the price action, or this bearish trend momentum reading will get deeper like it did back here. The last bearish trend momentum reading actually had a very steep decline in the price. So we could see a repeat of that. If you look at the prior one, the market consolidated for about the same length that it's consolidating now before it just fell apart. And look, it rallied 3 bars in a row rally before the market fell apart. And you see the market's attempting to do that here too. So just something to think about as we're moving forward. All right. Next up, we got nat gas, which is still in a bear market and it's locked in. The bear market has reclaimed that price and is not letting go of it. So down it goes. Next up is the Dow. So the Dow's in a bull market, but we got a bearish trend momentum reading, and we have a crash alert for tonight into tomorrow's trading. We came into today with a crash alert, and look what we got: downside production. I told you that those alerts are something else, man. You can't ignore them. So the 33,000 needs to hold. That's the Kumo Cloud support for the Dow. If 33,000 does not hold, then this market is on its way to take out 52-week lows. All right, just FYI, folks. FYI. Next up is the NASDAQ, which has crossed over from bear market to bull market. But we had a bullish trend momentum reading, right? Then yesterday the market was neutralized. Now it's come off of neutralized, and we got a bearish trend momentum reading and a crash alert for tonight into tomorrow's trading. All right. 13,000 is the current support. And if that doesn't hold, well, we got the 12,500 Kumo cloud, top of the Kumo cloud support. And if that doesn't hold, folks, this thing's dropping. And it's going to come all the way down here to these old lows. All right. So FYI, let's see what the Fed can do. They got to pull a rabbit out of the hat tomorrow. They got to do something, because if not, these markets are over. Here is gold. Now, gold's in the bull market, but we got a bearish trend momentum reading. We also had a crash alert, but we didn't get any downside production from this crash alert here. All right. And you only got a little bit of downside production from this crash alert and this one. So the market is showing strength in the face of a bearish trend momentum reading and multiple crash alerts. We're not getting any downside production with these crash alerts. So is that saying something about the strength of the gold market, bull market? Or is this market building up for a huge downside move? That's the scary part. Remember, 1900 is the major psychological support for gold. Gold has a real tough time staying above 1900. If it does it this time, it'll be the first time of it staying above 1900 like this. It just has a real bad history with 1900. So is the old 1900 resistance going to be the new support like it's supposed to be? It's going to have to be tested, and it has not been tested. It should have already dropped when we got these crash alerts back here. That the market actually ignored. This is a rare feat, ladies and gentlemen. Under normal circumstances, when you get crash alerts, they can lead the market 3 to 5 days out, but after that, but generally within that time frame, the market does what it's supposed to do. So this one was here. So we got 1, 2. Today was 3 days in on a crash alert. We still got 2 more days before this crash alert becomes invalidated. So the market could still roll over Wednesday or even Thursday. Just FYI, this 1900 area needs to be tested. If it fails, then gold too will be testing the 52-week lows, folks. I know you don't want to hear it, but I'm just giving you the information. Do with it as you will. S&P 500 is in a bear market, and it had a bullish trend momentum reading. Now it has a bearish trend momentum reading and a crash alert for tonight and tomorrow's trading. We had a crash alert back here. We finally got this downside production. Yesterday was also a crash alert, but it was also neutralized, and the market has fallen down. If the 4,000 support does not hold, then this one too, the 52-week lows come into play, folks. I know this is drastic, but this is the circumstances we find ourselves in. I got a question here in the live. Let's see. It says, Dex, do you think if EU banks start to fail, do you think we will see capital flight from Europe to the dollar? Too big to fail banks being backed 100% by the Fed or to treasuries? If so, could that be? That is a darn good question. And that's a question that a lot of analysts are asking themselves and have been asking themselves, believe it or not. We have a contagion effect. We have because of globalization. There's a lot of money invested overseas into the United States, and it's a lot of money in the United States invested overseas. That's due to globalization. So, it's tough to say, but I have to agree that any sign of major trouble like we have right now, it's going to be a contagion effect. It's going to affect other areas. So I'm going to say, yeah, you could see that. You really could. It's just one of those things. You got to be prepared for it. It is a huge possibility. We're in a land of unknowns. Like I said in today's podcast, if you missed it, we're already worse than 2008 already. People don't realize that, but we are. All right, here's crude oil. Just like I told you, bear market, bearish trend momentum reading, which means this market is in a locked-in bear market. And we saw a huge sell-off today. And where did the market stop? right at the bottom of the Kumo cloud. That's where the market stops. So that the bottom of the Kumo cloud support for right now is holding. Where do we go from here, though? That crash alert played out nicely, which I showed you in last night's video. And right now, the market is at a crossroads. If the support does not hold and we break south of this Kumo cloud, then the 52-week lows are right here. And the market will be gunning for that. And there's a strong possibility it could take the whole thing out as well. All right. So, you know, these are the questions that the world is asking. It says, what up, Dex? If the Fed decides to pause, how likely is a market rally? You know, there's a case for a market rally. There really is. And like I said in today's podcast, I believe that if we do see an upward push, it is definitely the Fed's doing. I think it's them turning on their laptop and buying treasuries and buying S&P futures to prop up the market. Plunge protection team at work. Can they do it? Yeah. The question is, though, will they be successful this time? And I don't know the answer to that one. Anything's possible. It's just that as we're looking at these charts, the Algo charts are saying it's not likely. According to the Algo charts, there's nothing they can do. They're in a rock and a hard place right now. We got crash alerts on just about every chart so far. I don't know how they can turn that. He's got to pull a rabbit out of the hat. He's going to have to make it rain gold and silver from the sky or something. All right, here's the Russell, though. Russell's neutralized now in a bear market, okay? And it's had a bearish trend momentum reading. Now it's neutralized. And you can see the price action hasn't been doing but so much. But we had that negative bot check, market came down. Positive bot check, market went up. Negative bot check, market stayed around. Then had a crash alert, pause, and then proceeded to drop. Then today we had a big drop. So you're south of the Kumo cloud already. So this market is locked in on the bear market persuasion right now. What is it going to do when it comes off of neutralized? I don't know. But the market is definitely neutralized right now. Where we go from here, who knows? But you just got to be ready because the 52-week lows are in play. And look, we're not so far away. If 1700, which is a psychological support, if 1700 does not hold in the Russell, 52-week lows are going to be fast and furious, and they're going to be right there. So it's just not looking good, man. These markets are teeter-tottering on oblivion. All right, so here's the dollar. Let's take a look at the algo charts on the dollar. So the dollar has been bullish, right, for a long time. Well, just recently now, over the last couple of days, it has now crossed over to a bear market. And we still have a bullish trend momentum reading. You can see the price is still neutralized, folks. It's consolidated. It's not going anywhere. It's trading in a tight range. 101 is the support and 103 is the resistance. The price action has remained in this tight range and it's not doing anything. All right. A move up or down in this range is not a rally and it's not a crash. You're just in a 200-point trading range. All right. 200 pips. And that's it. Until the market comes out of this range, it's not going anywhere. And the second support is at par. You don't have a second resistance until you get way up here into the 108, 109 handle. But as far as the supports, par is also a very strong support. Falling below par, and that's curtains for the dollar. All right. It can't do it. Not in this environment. Back when Bush and Clinton, and even Obama for that matter, was in office, they had a strong dollar policy, keeping it above 90 cents, and that was okay for that environment. But in today's environment, a dollar subpar, falling below par and staying there is a death sentence. It's saying that Russia and all the other countries are being very, very successful in the de-dollarization process that they've been up to. I know. It's getting crazy. All right, here's Ethereum. So Ethereum's in a bear market. It now has a bullish trend momentum reading, and it has a rally alert for tonight into tomorrow's trading. Both Ethereum and Bitcoin have rally alerts for tonight into tomorrow's trading. How much higher can it go? It's a tough call because there is a resistance. And in Ethereum right now, your resistance, we'll just round it off and say 2,000. 2,000 is the current resistance for your Ethereum futures right now. All right, so that's it, folks. I know it looks dreary. It's a lot of weakness around here, but it doesn't mean that everything is, altogether hopeless. So it's not hopeless. We're not gonna say that. We're not gonna go there with it. But just understand what's at stake. Understand what's going on here. And these markets, they're screaming at us. They're saying something. We got a crash alert in the Dow, crash alert in the S&P, crash alert in the NASDAQ. You know, what are you going to do with that? It's not a whole lot. Oh, bonds, TLT. Okay, sure. I can pull that up for you real quick. How could I be remiss and not talk about bonds? And we got an FOMC day tomorrow. All right, let's see. Let's knock this out. This will be our last chart because I do have to run. All right, so let's see. Let's get this up. It'd be nice if my screen could hurry up. Okay, hold on. Bear with me. All right, here we go. Okay. All right, so bonds have been pretty much flat. Look how flat this market's not going anywhere. It's stuck. 110 is the resistance, and it just cannot get above 110. And now the price action did drop below the Kumo cloud, and then here we are rallying and closing above the very narrow Kumo cloud. So this market is consolidated. It's not going anywhere. It's in a very tight trading range. So we'll just call it 105 to 110, so a $5 trading range. Not really doing anything. But for the record, TLT is in a bear market with a bearish trend momentum reading, which means it's a locked in bear market. It's in sell the rally mode. Every rally gets sold. Every rally gets sold, 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 and sold. And it will continue to do that until it breaks out of its rhythm. But it's in a bear market, so there's nothing bullish on the chart. On the Outgo chart, there's not a thing bullish. If it gets above the 110, then yeah, that's bullish. But if we drop back below the 105, that's even more bearish. Okay, so it is what it is, man. This is what the markets are looking like, and we just have to, see what's up. Now, Lord willing, tomorrow I think I do want to do a live FOMC just to see, what happens, because it's such a big deal right now. There's so much going on. I think the situation does call for a live FOMC. So be ready for that tomorrow, and we're gonna track this and see what's up. And based on and determining what happens in the markets, there may be a FOMC put in the market. And if it is, then I'll see if I can find it for you right quick while we're in the live, and we can just have at it. All right, folks, you know what it is. Smash that like button. The system works if you work the system. It takes patience. Patience, folks. You got to let your trades develop. Sometimes you're holding positions for days, weeks, sometimes even months. And while you're holding positions, you may experience drawdowns. All right. And you just have to be prepared to do what you got to do. And if you're wrong and you get stopped out, you just stop and reverse and get on the right side of the market and just let the market carry you to the promised land. It's just that simple. Okay. Bulls make money, Bears make money and pigs get slaughtered. So remember to take what you can and give nothing back. And I'll see you in the next one. Peace.